Investing your first $1,000 is more than a financial transaction. It's a rite of passage. In 2026, the landscape has shifted. We are navigating a multipolar world where AI isn't just a buzzword, it's the infrastructure, and where interest rates have finally settled into a new normal after the volatile swings of the early 2020s. If I were starting from zero today, March 3, 2026, here is exactly how I would deploy $1,000 to build a foundation that lasts decades. Phase 1. The Sleep Well at Night Foundation, $400. Before you chase the next 10x tech stock, you need a floor. In 2026, cash is no longer trash. With high-yield savings accounts, HYSAs, still offering around **4.00% to 5.00% APY**, your first move is protecting your liquidity. The strategy. High-yield cash. I would put $400 into a top-tier HYSA, like those currently offered by **Lending Club or Sophie Why? This acts as a mini emergency fund. The goal. To ensure that if your car breaks down or your laptop dies, you don't have to sell your investments at a loss to cover the cost. Phase 2. The Core Growth Engine, $500. The biggest mistake beginners make is overcomplicating their portfolio. You don't need 20 different stocks. You need a broad slice of the entire global economy. The strategy. The total market, set and forget. I would allocate $500 into a low-cost S&P 500 index fund or a total stock market ETF. The pick, Fidelity 500 index fund, FXAIX, or Vanguard S&P 500 ETF, VOO, The logic, in 2026, the S&P 500 remains the benchmark of American resilience. By buying this, you instantly own pieces of Apple, Microsoft, and the energy giants powering the AI revolution. The power of fractional shares in 2026. Platforms like Fidelity Schwab and Robinhood have perfected fractional trading. You don't need $4,000 to buy one share of a high-priced stock. You can buy $5 worth. This allows your $500 to be fully invested across hundreds of companies immediately. Phase 3. The Future-Proof Tactical Bet, $100. The final 10% of your capital is for asymmetric upside. This is where you lean into the specific trends defining 2026. AI infrastructure *** and the *** energy transition. The strategy, sector-specific ETFs. Rather than gambling on a single startup, I'd put $100 into a thematic ETF. The trend, energy for AI, Data centers are consuming electricity at record rates. The pick, a fund focusing on the nuclear renaissance, or grid infrastructure, such as a clean energy ETF. Why? As Morgan Stanley's 2026 outlook suggests. Powering AI is the new bottleneck. Investing in the companies that provide the electricity for the AI models ensures you're betting on the shovels of the gold mine. # step-by-step execution guide. If you are ready to pull the trigger today, follow this workflow. Step: action. Platform recommendation: **1*********** open a brokerage account ******** Fidelity ****** best overall, or Robinhood *****, easiest UI. ************ automate your savings *****. Set up a recurring transfer of $25 per week. Consistency beats timing. **3*********. Check your fees *****. Ensure your ETF expense ratios are below **0.10%**. Don't let fees eat your future. ### The golden rule for 2026 $* cost averaging. DCA ** is your best friend. The market in 2026 is seeing a 35% probability of a recession, according to J.P. Morgan. By investing a small amount every month rather than a lump sum, you actually benefit from market dips because your $100 buys more shares when prices are low. ## summary of the $1,000 breakdown. 1. $400. 40%. ****. High yield savings, safety and 4.5% yield. 2. $500. 50%. ****. S&P 500 Index Fund. Long-term wealth. 3. $100. 10%. AI, energy sector bet, growth potential. Investing isn't about being right about a single stock. It's about being in the market long enough for math to do the heavy lifting. Your $1,000 today is the seed for a forest 30 years from now. In 2026, the phrase, "the best time to start was yesterday," still rings true, but the way we start has changed. We are no longer in the era of easy money and 0% interest rates. Today, the market is defined by what analysts call the ***3 pillars, artificial intelligence infrastructure. A shift toward value-oriented cyclical stocks, and a renewed respect for cash as an asset class. If you've managed to scrape together your first $1,000, you aren't just a beginner, you're a future builder. Here is the blueprint for how to deploy that capital in the current March 2026 landscape. #1. The safety net. Cash is a tool. $300. In previous decades, keeping $300 in savings felt like losing to inflation. In 2026, the script has flipped. With the Fed maintaining a cautious stance, high-yield savings accounts, HYSAs, A.